Lithium Americas Corp., trading on the New York Stock Exchange under ticker symbol LAC, is currently sitting at $2.90 per share in pre-market action on August 3, 2026, up slightly by 0.35% from its previous closing benchmark of $2.89, following a regular trading session drop to $2.87 on July 31st. Most retail traders glancing at their individual brokerage screens see a beat-up mining ticker floating dangerously close to its 52-week low of $2.47, assuming this is just another penny stock trap crushed by falling commodity prices. The conventional consensus assumes that investing in early-stage battery material producers during a prolonged lithium market slump is a fast track to capital destruction. The real story, however, presents a striking contrast to that surface-level narrative. Beneath the brutal price chart lies a company holding the key to the largest known lithium deposit in North America at Thacker Pass, Nevada, backed by nearly $1 billion in capital commitments from General Motors and direct structural backing from the United States Department of Energy. While mainstream sentiment treats this asset as a failing speculative play, strategic insiders and institutional allocators are watching a massive supply chain transformation unfold in real time. Looking at recent price dynamics, Lithium Americas stock has experienced severe downward pressure, swinging wildly within a 52-week range between $2.47 and $10.52 per share. Over recent trading sessions, trading volumes have remained elevated, hovering around 5 million shares daily as short sellers and value-oriented investors fight for control over the price direction. The broader market narrative has been heavily dictated by soft spot prices for lithium carbonate across global markets, driven by temporary oversupply from Asian processing centers and a cooling pace of global electric vehicle sales expansion. When mega-cap tech benchmarks like Nvidia stock or Apple stock experience volatility, market liquidity shifts rapidly away from capital-intensive commodity developers like LAC. Traders using Robinhood stock trading features, interactive brokers trading tools, or the SoFi active investing dashboard have watched the stock struggle to hold key technical support zones around the $3 threshold. Institutional positioning across major asset management firms using the Fidelity trading platform or Schwab Intelligent Portfolios reflects a split sentiment. Quantitative funds have dumped shares due to short-term negative cash flows, while long-term strategic funds are quietly building base positions. To understand why this gap between price action and asset value exists, one must look closely at how market participants approach online investing today. Investors scanning popular investing sites or seeking self-investing insights through an online investment platform often focus purely on current quarterly net income. Because Lithium Americas is actively constructing a massive industrial complex rather than selling finished battery materials today, its quarterly earnings figures predictably show zero commercial revenue and ongoing capital expenditures. For algorithms and short-term traders monitoring a Fidelity brokerage account or a SoFi trading platform, ongoing operating expenses look like financial distress. Yet this perspective ignores the fundamental timeline of resource development. The recent market swings reflect macro fears over electric vehicle battery demand rather than structural flaws within the Thacker Pass asset itself. While headline readers panic over temporary inventory digestion in the automotive sector, those examining interactive brokers' fees, margin requirements, and institutional order flows recognize that physical construction on the ground in Nevada continues without interruption. The tension between short-term chart weakness and long-term asset value becomes even clearer when examining the corporate evolution of Lithium Americas. The present corporate entity was structured in late 2023 following a strategic separation that split the old parent company into two independent public entities, Lithium Argentina, which retained the South American brine assets, and Lithium Americas Corp., which took full ownership of the North American claystone lithium asset at Thacker Pass in Nevada. Thacker Pass represents a unique geological formation containing tens of millions of tons of lithium carbonate equivalent. Recognizing the critical nature of this domestic resource, General Motors stepped in with a monumental equity investment and joint venture structure totaling $945 million, securing exclusive offtake rights for Phase 1 production to supply its North American electric vehicle manufacturing facilities. Furthermore, the United States Department of Energy finalized a massive $2.26 billion low-cost loan structure, later acquiring equity stakes directly in the company and the project to ensure construction moves forward smoothly. This level of government and corporate backing is exceptionally rare for a company trading under a $1 billion market capitalization. For individual investors using Fidelity mutual funds, Fidelity ETFs, SoFi ETFs, or managing an individual brokerage account for Fidelity Wealth Management or Fidelity IRAs, evaluating a stock like LAC requires balancing patience against execution risk. Building a world-scale chemical processing facility in the Nevada desert involves complex engineering, water management, environmental compliance, and long capital deployment cycles. Historical cost overruns and delays in the mining sector are common, and Wall Street pricing currently discounts LAC heavily under the assumption that commercial production schedules might slip or require secondary equity offerings that dilute existing shareholders. However, the reality of the situation reveals that the financial backing provided by General Motors and federal loan programs significantly insulates the core project from cash starvation. Unlike junior exploration companies that must constantly issue new equity to survive a commodity downturn, Lithium Americas possesses a fully funded runway designed specifically to bridge the gap until commercial operations commence. When analyzing the automotive landscape, the broader demand story remains inextricably tied to long-term electrification trends. While media headlines frequently highlight a temporary moderation in consumer adoption rates, major automakers are shifting vast amounts of capital towards domestic supply chains. Companies scaling up domestic battery plants rely heavily on secure, local sources of battery-grade lithium carbonate to qualify for clean vehicle tax incentives and reduce geopolitical supply dependencies. Whether an investor holds Tesla stock or tracks broader automotive ETFs through SoFi Invest or Robinhood App Holdings, the necessity for North American lithium processing facilities remains absolute. Thacker Pass is engineered to produce 40,000 metric tons per year of battery-quality lithium carbonate in its initial phase, a scale that instantly positions it among the most significant mineral assets on the continent. Current market spot prices for lithium may reflect cyclical lows, but mining projects constructed during market troughs are historically the ones that reap extraordinary profit margins when the next demand cycle tightens global supply. Comment below how many shares of Lithium Americas Corp. You currently hold in your portfolio, or whether you think domestic mining projects like Thacker Pass will successfully power the next generation of electric vehicles. Looking ahead towards future catalysts, several critical milestones will dictate whether Lithium Americas can close the gap between its beaten-down share price and its multi-billion-dollar asset value. Key technical catalysts include major earthworks progress, structural steel installation, equipment delivery, and regulatory milestone clearances at Thacker Pass. As construction progresses towards operational readiness, market sentiment is likely to pivot from treating LAC as an unprofitable speculative ticker to valuing it as an operational infrastructure utility with guaranteed long-term offtake partners. Macroeconomic shifts will also play a massive role. Any sustained rebound in global lithium chemical prices or a pivot in global central bank interest rate policies that lowers capital costs across industrial sectors could trigger aggressive short covering across the entire junior mining space. Conversely, potential risks cannot be ignored. Unexpected environmental litigation, operational delays during initial processing plant commissioning, or severe global economic recessions could keep valuation multiples compressed for longer than retail investors expect. Navigating this asset requires a disciplined framework for anyone engaging in online investing strategies, whether through an intelligent portfolio algorithm, an interactive broker's account, or self-investing research on popular investing sites. The market narrative often focuses on past stock price declines from historic high watermarks, treating the drop as evidence of fundamental failure. The deeper structural reality shows a de-risked asset moving methodically through its capital expenditure cycle with top-tier corporate and government partners. The stock price reflects short-term market noise, commodity market cyclicality, and retail fatigue. Investors utilizing investment help tools, checking positions on the Fidelity mobile app, or reviewing holdings across